Hello, and welcome back to the channel. Today, I'm going to address one of the biggest concerns many of my clients have when it comes to their retirement plans. What they consider the biggest risk. You might be surprised to hear what that risk really is. If I ask my clients what they fear most about their retirement, many of them say the same thing: the risk of their assets falling in value. But I don't necessarily agree with that concern. In fact, I believe that there's a more consistent, more persistent threat to your retirement, one that we can't ignore: inflation. Over the past decade in the UK, the average inflation rate has been 3.3%. Now, we had some years where inflation spiked, like in 2022, when it reached 9.1%, and some years where it was flat, like in 2015. But there was only one year in that period where inflation was flat. There were no years where it went negative. So it's almost certain that inflation, to some degree, will occur every single year. And that means the value of your money will erode if you're not actively protecting it. Even in those low inflation years like 2015, inflation still had an impact on purchasing power. So inflation is something that we have to factor into every retirement plan. You simply can't afford to ignore it. Now let's compare global investment index, like the MSCI World Index. Over the last decade, this index delivered an average return of 11.9% per year, but the returns were volatile. There was a high of 24.4% in 2024, also a loss of 17.7% in 2023. Growth in the stock market can be unpredictable, but despite the ups and downs, the average return of the stock market over time has outpaced inflation significantly. If you invested £100,000 at the beginning of a 10-year period and just let it grow in line with markets, average return of 11.9%, that investment would have grown to £308,000 by the end of the decade. So that's a huge difference from the impact of inflation. If you just let that £100,000 sit in cash with an average inflation rate of 3.3%, it would only be worth £74,000 after 10 years. So you've effectively lost 26% of its value just by not investing it. That's the real risk you face, letting inflation erode your money without putting it to work for you. Now, it's very hard to predict exactly when the stock market will go up or down in the short term, but over the long term, the market tends to rise, and it's the time you spend in the market that matters more than trying to time the market. So Warren Buffett, who I'm sure you've all heard of, one of the most successful investors of all time, he famously said, "The stock market is a device for transferring money from the impatient to the patient." That's why time in the market is far more important than trying to pick the perfect moment to invest. No one knows when the next market dip will come, but we do know that over time, the stock market tends to bounce back and more. The trick is not to panic during the downturns and stay invested for the long run. In 2018, we saw a global market loss of 8.2%, but that was followed by a 28.4% growth in 2019 and another 16.5% growth in 2020. It's a reminder that losses can be temporary, but when you're looking at the long term, the market tends to recover and more. So the real risk is not losing money, it's withdrawing money when the market is down. If you sell your investments at a loss to cover short-term needs, you lock in those losses and miss out on the recovery. That's why it's critical to segregate your investments into different pots based on when you'll need. Short-term funds should be kept in safer, more liquid investments, while longer-term funds can be exposed to more volatile, higher returning assets. This is where professional financial advice comes in, helping you manage these pots and ensuring that you're never forced to sell at a loss. So while the fear of losing money in the short term is understandable, the real risk to your retirement is failing to plan for inflation and not investing over the long term. So if you found this video helpful, give it a thumbs up, subscribe to the channel for more insights on personal finance, and share it with anyone you think could benefit. And also, if you're ready to take the next steps in securing your retirement, reach out. I can give you some professional advice or put you in contact with the correct person. Thanks for watching, and I'll see you in the next one.